My name is Janet Shur, and I've been working for about 40 years in the field of income tax. Um, and income tax for regular people for the most part, not for big corporations or huge landlords, but mostly for regular people. I'm going to give kind of a basic overview today of some filing requirements and then some reasons why you might want to file, even if you don't have to file. But I want to stress that tax rules change. There's a lot of changes for 2021, actually helpful ones, but tax rules change often every year. And also, without knowing everything about someone's situation, what I say may seem applicable to you, but you really have to talk to somebody at more length than just what I'm going to be saying in order to know whether what I'm saying applies to you and how it applies to you. But I'm basically just going to raise some issues, and then you would go further with those issues. Basically, the first thing I was going to talk about was, do you need to file a tax return at all? And that answer is based on a combination of what your income is and what your filing status is. The IRS has many different definitions of income, which have to do with before you take your deductions, after you take your deductions. But basically, I'm going to be talking about the kind of income on which you're going to pay tax, or the kind of income that you have before you take a standard deduction. So pretty much everything is income, except everything that you earn, compensation, if you have interest on a bank account, even if it's low when there isn't much, that is taxable income. If you have a pension, that's income. If you rent a room in your house, that's income. If you have unemployment compensation, if you have alimony, sometimes that's income and sometimes it isn't. The rules have changed on that. The IRS knows about your income because usually, because if you are a wage earner, you get a copy of your W-2, but so does the IRS. So if you are a gig worker and someone sends you a statement of your income, which is different than a W-2, but it'll say how much you earned, that goes to the IRS too. So they already know a fair amount about you. There are some things that are not taxable income, and basically it's gifts, workman's comp, inherit stuff you might inherit. But if you're earning anything or getting paid for something, you should assume it's probably taxable. Social Security benefits are taxable in part. So you take your income and then you look at your filing status, and there are 5 filing statuses. There's single, and that's pretty obvious, you're single. You can't file single if you're married, even if you're separated from your spouse. Single is single. There's married, filing a joint return where you and your spouse combine all your income, all your deductions, and you file everything on one return. There's married filing a separate return where even though you're married, you don't want to file together, then you file separately. And then there's a somewhat more complicated status, which I'll talk about. But going back to married, whether or not you're married for purposes of taxes is determined on December 31st. So if you get married on December 31st, you're married for the whole year. If you're separated and in the process of getting a divorce, but your divorce isn't final, you are still married. So if your divorce is final, you're single. Married filing separate, you might consider, if you don't really trust your spouse is being honest on the tax return, because basically both of you are attesting that the tax return is legit, and that if your spouse disappears, you're still going to be stuck with the tax on the whole return. And there's some situations where you wouldn't be, but that would be a reason to file separately. But there is a provision that's or a filing status called head of household, and it's fairly complicated, but it's really beneficial. If you're single and you're providing a home for a relative or a child, a dependent, then you can file as head of household, and that's you'll have a better tax result. So that if you're single and you have $20,000 in income, and you file as single, you'll owe a certain tax. If you file as head of household, if you qualify, you will pay less tax. You do have to be single unless you have to be unmarried, and unless you are keeping up a home for unless you're keeping up a home for a child or some qualifying person. And qualifying people can be a child, it can be your nephew or niece, it can be your younger brother or sister, just as long as no one else is claiming them. And if you are in the process of getting a divorce and you don't live with your spouse, then you're much better off, and you do have a child that's living with you, you are much, much better off claiming head of household, and rather than married filing separate. And you're better off claiming head of household rather than single. You will pay less tax if you qualify. So basically, do you have to file? There is a handout that goes along with this little talk, and that's going to have a lot more detail than what I'm going to go over now. And it's also going to have references to websites where you can find out even more detail, probably more than you'll ever want. But if you're trying to figure out, for example, if you qualify as a head of household, you can look at the handout and go to the reference, and you'll be able to figure it out. Basically, if you're single, you have to file a return if your income is over $12,550. If you're head of household, you have to file a return if your income's over $18,800. If you're married filing jointly, you have to file if it's more than $25,000. And married filing separately, you have to file if it's more than $5. So that's the reason not to want to file. There are plenty of reasons not to file married filing separately. There are plenty of very good reasons to file jointly, unless you can qualify for head of household. There are exceptions to these rules in terms of the numbers that I just gave out. If you're a gig worker or an independent contractor, or someone's paying you, but they're not withholding any tax at all, meaning that like they're paying you $15 an hour, $10 an hour, let's say, and you work 30 hours and they pay you $300 and your check is $300. That means they're not withholding any taxes. And the filing requirement for that kind of income is only $400. If you have more than $400 of that kind of income, you have to file. There's some other situations. If someone is claiming you as a dependent, you might need to file even if your income's lower. But then the question that's really important is, what if you don't need to file? What if you're not required to file because your income's lower than the filing thresholds? Should you ever do that? Should you file? And I'd say there's an emphatic yes to that question. For example, if you've had a job and they've withheld taxes on your salary, if they've withheld income tax, and then it turns out when you calculate how much do you really owe, you would be getting a refund of some of those taxes that you've paid. The IRS won't figure that out for you. If you don't file, you're not going to get that refund. And you have to file actually within a couple of years of the tax year, or you'll lose your refunds. And sometimes people have pretty substantial refunds that they just leave because they think they don't need to file, and they don't need to file, but they're basically making a gift to the IRS. There are some things that carry over year to year, like if you have a loss, let's say, well, it would have to, if you have a loss on, you sell a mutual fund and you have a loss, you can carry that over to another year and it will offset your taxes in another year. But then there's all the non-tax reasons why you might want to or need to file a tax return. Often when you're applying for financial aid, you need to show a tax return. If you're trying to get an apartment, rent an apartment, the landlord may want to see your tax return. So those are non-tax reasons. The biggest tax reason to file a tax return when you don't have to, as opposed, along with getting your refunds, is that there are things called tax credits. And those, you can get some credits where the government will give you money even though you don't owe any tax and even though you haven't paid a penny in. Or they'll give you a bigger refund than you would otherwise get. And those are called refundable credits. There's a very big one called the earned income credit. Generally, you have to be 19, at least 19, unless you have been a foster child, and then you can be 18 and claim this. But generally it's 19. If you're a student, it has to be older. You can qualify, typically to get this, you needed to have kids. Now you can qualify for some credit. It's a lower credit, even if you don't have kids. This is one where if, let's say in 2021, you're making money, but in 2019 you weren't. It's a weird rule, and it's only for this year, for 2021's taxes, but you can use your lower 2019 income to calculate whether you're eligible for this credit. Most software programs, even free stuff online, will calculate this credit for you, and even the IRS will if you check a box. No, not check a box. You have to write something into your tax return. In the handout, there's a chart that shows how much, where your income needs to be. Oh, here it is. So let's say you have no children, or this isn't just your children. Again, we go back to, it can be your grandchild, it can be your niece or nephew, as long as you are supporting them, they're living with you and no one else is claiming them. So, hold on, I just want to get rid of that thing. So if you have no children and your income is below 21,000 and you're single, you can get this credit. The way it works is somewhere between 0 and 21,000 is the peak of the credit. It kind of goes in a curve. So above 21,000, you'll get nothing. Around 20,000, you'll get a little bit. Around 18,000, you'll get a little less. But around 15, 14, 12,000, you'll get a lot more. The maximum you can get if you have no kids is $1,500. If you have one child, again, or grandchild, niece, nephew, the maximum you can get is $3,600. If you have, let's say, 3, you can get $6,700. And with 3 children, your income can be as high as 51,000. You won't get the maximum if your income is that high. But you'll get the maximum you could get sort of in the middle of the income range, 0 to 51,000 would be 6,700. And there's different limits for whether you're married or not married. So that's a great credit. It will give you money back even if you don't owe a penny. The next one that's a really nice one and has changed this year for 2021 is this child tax credit. Again, here the child can be other relatives as long as they live with you. The credit amount can be up to $3,600 per child if the child is under 6. You have to claim the child as your dependent. And there is here an income phase out, but where you won't get the credit. But if you're single and your income is under $75,000, and that's a high number, you can get this credit. If you're married filing joint and your income is $150,000, you can get this credit of $3,600 or $3,000. And if your income, I mean, this is amazing. If your income and you're married filing jointly is under 400,000, you still may be able to get, it'll be a lower credit. But I can't imagine I don't really talk to people whose income is above 400,000. So you can still get this if your income is really quite high. You won't get the full credit. You won't get 3,600, but you might get 2,000 or you might get 1,000. So that's what's called the child tax credit. And it has been expanded. Now, many people who filed their 2020 returns may have received 6 months of this child tax credit already. The payments started coming out in July, and they were based on your 2020 or your 2019 income, whatever the IRS knew about. But in fact, if your income is lower in 2021, if you had a child born in 2021, that credit can be increased. And also all the advanced payments that you got was 6 months. It was half of the full credit. In order to get the other half of that credit, you have to file a 2021 tax return and claim it. It's not hard to do, but the government will not send it to you without you filing a 2021 tax return. And as you can see, there's a lot of money here. It's, again, let's just say between the ages of 6 and 17, if you have 2 kids, that's $6,000 as long as your income let's say you're single and you make $60,000 and you have 2 kids, the government's going to send you, and you probably already received 6 months worth of stuff if you've filed your past tax returns. If you haven't, you can get the full, for 2 kids, that would be $6,000. They're going to send you $6,000 if your kid is between 6 and 17. So I can't encourage you enough to file to get that credit. Even if for dependents over 18, there's another tax credit called the dependent tax credit. And this way, for this credit, it's $500 per dependent. Now the IRS, for people who receive the first 6 months of the child tax credit or the other dependent credit, you're gonna have to say how much you got. And there are ways to find out how much you actually received if you don't have this IRS, if IRS send a letter, but if you don't have it because it didn't look important actually, and probably many people threw it away. or haven't opened it. That's another thing that I find that there's stuff in the mail that you just never open because you don't want to know anything that the IRS has to tell you. Anyway, you need to know how much you did receive. There in the handout, there are citations for how you can find that out. So then for those of you who are students or who have, these are the education credits. And if you're an undergraduate and you're single and your income is under $90,000 a year, and if you're married and you're filing a joint return and your income is under $180,000 a year, you can get up to $2,500 of your educational expenses basically refunded to you. You have to, typically the educational institution will send you one of these tax forms that shows how much tuition you paid. There's special rules if part of your tuition was scholarship, but basically this is a lovely credit for people who've had to pay tuition. And here too, part of this credit is what's called refundable, which means you can get money back even if you don't owe a penny in taxes. So there's basically two education credits. This one, American Opportunity Credit, is for undergraduates. And then the Lifetime Learning Credit, you don't have to be in a degree program. You can be any age. You don't have to be going to school full time. You can take one course, and you get a percentage of your qualifying educational expenses. I believe it's 20%. So if you spent $10,000, you would get a $2,000 credit. That's the maximum. Here too, there's an income phase out. If you're over 90,000 for a single person or over 180 for a married filing joint person, you won't qualify. But actually, up to 80,000 for a single person, you're going to get the full credit, and then it phases out from income of 80 to 90. I mean, these are credits that most students can probably qualify for. There's also a child care credit, which has changed greatly for 2021. And it's based on a percentage of your child care expense while you're working or while you're looking for work. There are rules about whether the child has to be your dependent, how old. The child has to be under 13. It will also work if you have a disabled person that you're taking care of. The credit can be as much as, for one child, the credit can be $4,000. And for two or more children, the credit can be $8,000. There is here too an income phase out, but it doesn't hit until your income hits 125,000. And you still get you get 50% of your expenses up to $8,000 for one child. So that's how you get to 4,000 credit. And over 125,000, that percentage goes down. But there's still a percentage up to 30% up to 165,000, 20% of your child care credit up to 400,000. I mean, these credits are available. Don't worry about the phase outs for the most part. The difficult part of this can be that you have to identify who provided the child care, and you have to give a social security number for that. So if your child is in a daycare center, that'll work. If your child is being taken care of by someone who doesn't want the IRS to know about it, then you can't do this. Also, if you're in their employment related programs that will let you pay for child care through your salary with pre-tax dollars. So those dollars won't be counted as taxable for you. And if you've had that money withheld, you need to show that you've spent it on childcare. But this is another extremely good credit, and it also for 2021 is refundable, meaning that you can get money back that you've never paid in. You have to live in the United States for more than 6 months. I should also say that you generally need, for the child care credit, the child tax credit, you generally need to have a Social Security number. But there are cases where you may not need the Social Security number as long as your child has one. Those are more complicated rules, and but it doesn't mean that you not having a Social Security number doesn't necessarily disqualify you, but your child does need one. Then there's one more I'll just mention, which is that if you've bought this, it's called the premium tax credit. So if you've bought health insurance and you have paid, and you've done it through the marketplace, which is what was set up after Obamacare was enacted in order to give people less expensive alternatives. If you've bought health insurance that way, it is possible you have, and your income in 2021 is lower than in 2020, or it's even lower. Let's say you lost your job halfway through the year and you kept paying for health insurance. You may be able to get a refund of part of that premium tax credit. So those are the major credits. There are other credits, but these are the ones that if you haven't been filing in the past few years because your income wasn't high enough, it's worth filing this year, and even going back and filing for some of the previous years. You can do that. Then obviously the question is, well, how am I going to do this? This is complicated. Where can I get tax help? And in the handout, I've listed several places for how you can get tax help. And I suspect they're overwhelmed at this point, but it doesn't mean that the help isn't out there. And you can look either in the handout, there's two right here on the screen, where there are ways you can get help from a tax return professional volunteer, or you can do your taxes online with prompts and help. And the income, you have to have under a certain amount of income, but the thresholds are very generous. I mean, you can, I think this tax return for qualifying taxpayers, the IRS volunteers, I think you can have up to $73,000 of income. Also, some commercial software, if you have a super straightforward return, they say they will do it for free. And I suspect in some cases they do it for free. You can get channeled off into a payment situation if your taxes aren't truly simple. But it might be worth paying a very reduced tax preparation fee to get all these refunds. So having said all that, I think I'm done. And I hope it's helpful. Don't worry if you didn't write stuff down, because the handout is very, very detailed. And it's been a pleasure. And thank you, Kaesla, for inviting me.